right, welcome today to another session for investment literacy. And today with us, we have Dillon, Blue Suit Dillon. Dillon, welcome.
Hey, what's going on, McCoon? Happy for you to have me here, and I'm happy to be here.
Thank you very much. It's been good. I can't complain too much. Thank you very much for coming on board. So we've been talking for nearly 2.5 years now. And you know the
It's a
first
while ago.
stock that you recommended to me that I made a lot of money on? Do you remember how
Um,
we got
I
connected?
think it's football.
That's
It's
right.
football. Yeah,
Remembers it. That's awesome. Yeah, so I
it's penny
think it
stock
was
now.
because you said, "Hey, take a look at Fubo." I bought it at 13.23. Sold it at 38 in 3 weeks. Those were the days.
Those were the days. That's when you can actually make money pretty easy here in the stock market. That doesn't happen anymore.
Tell me about your background. Tell me how you got started, why you got started with investing. You've been around the block for a little bit. You've seen ups, you've seen the highs of the high, and you've seen the lows of the lows. Walk me through
Yep.
why you started investing. Tell me a little bit about the background so folks understand what's the
Yeah.
context for this.
So the why is always so important. I was actually going to write a Substack about that because um, why should any of us invest really, right? And it really comes down to a simple solution. I think it's very nuts and bolts for all of us is that we all just want to be rich. It's pretty simple, right? Um, but it's not always that easy. For me, I spent 4 years in the Marine Corps and then 4 years in college. So
Right.
I got a later start to life. So I graduated college probably when I was about 27 or 28 years old, and I'm
You
32
still
right
look
now.
21.
Ah, thank you. I do the best that I can. I'll tell my wife that you said that. Uh,
She looks 19 if you want to make sure that you let her know that. Even
yeah,
if she
she's a
doesn't, she
hottie.
looks 19. That's the trick.
She's over there right now. But um, when I got out of college, actually started making some real money, right?
Hmm.
So it wasn't right away. Like when I was in the Marine Corps, I think that they paid us, man, $1,400 a month, but they paid for all of our living expenses though. So like we didn't have we didn't have to buy anything. All we really had was all we had to buy was like a car payment and a cell phone bill. So that was
Okay.
my all my expenses. And obviously I basically drank it all away. 4 years in the Marine Corps, right? And then got out, went to college, and then I actually once I graduated, I started making real money. And my first job out of college was Gartner, if you can recall. So I was an account
You were a business
executive for
development
Gartner.
guy for Gartner.
Yes, I was. So I was an account executive for Gartner, and that's really where I got a lot of my business IQ. Because I learned about the organization. And Gartner was a very complex sale because you had to learn about the organization, like what the mission was for the organization, and aligning Gartner's products and solutions to their business goals.
Right.
And the reason why that was so complex is because I was selling to CIOs. So that really helped me understand like how to dig into a business model and understand what the business model was and what the whole purpose was. Like, so I got it into the ability to get into a lot of different executive teams, and collaborate with them and figure out what their business goals were. So that really helped. But then when I actually started making really good money when I was in pharmaceutical sales, and that happened in 2019.
Hmm.
Um, and then in 2019, that's when I got into pharmaceutical sales, and that's when I started making well over six figures a year at that point. And I finally had some money to start putting away, and I did start putting money away casually in like ETFs and index investing, and didn't really they I saved as much as I possibly could, but I wasn't super focused on it yet.
Okay.
Um, and then that's when the pandemic hit, and then obviously all of us had just I mean, so I was in medical sales. I was in cardiology medical sales at this time. And we all locked down the economy and they had us sit at home for about 3 months, not doing a thing. So like we would have to send out 10 emails a day
This
and
is
then that was it.
March through June of 2020.
Well, it was late February. So yeah, we started getting pulled from the field earlier. So like right in the middle of the market crash. And that's when I was like, oh boy, the world is really going to go bad. I panicked. I think I'm not sure if you're a big guns guy, but I kind of panicked. And I bought like thousands of rounds of ammunition, so I got freaked out. I think all of us did.
Sorry.
I really did. It was scary because if you recall, like this pandemic was sweeping through the United States, and we started locking things down, and um, I mean, it was scary.
Yeah, I can
And
understand.
but then I noticed, there's the old adage that you got to buy stocks when the markets crash. So I started buying stocks, and I started buying things like JP Morgan. Um, I think JP Morgan was one of my first stocks, and then I had a couple other like Motley Fool recommendations, and I'm like, 'cause I had a nice sum of money sitting on the side. So I had a couple $1,000s to just really get it kicked off, and I'm like, you know what? I'll throw some cash in there, and I started picking my individual stocks, and then that's really where it all started. Um, because I had the time. I think that that's the important part, Makun, is that learning how to invest isn't an easy thing to do, uh, especially when you're learning how to pick individual stocks or even have the mindset that comes along with it. So I actually had the time to, after I sent my 10 emails a day, I had time to read books. And I read a lot of books. I read about 3 or 4, maybe 5 different books that summer on investing. And
Wow.
I just learned as much as I possibly could. Whether it was going to be an audio book while I was working out, or it didn't matter what it was, or driving around, because we actually were back in the field by about June or July timeframe, but nobody
Mhm.
wanted to talk to us. Like none of the doctors, they were just like, get out of here. So I had to make it look like I was busy. So I drove around. But it was that's really where I started learning a
So
lot about all
you
that.
started learning by reading a lot of books, just picking up as much
Yep.
information that you could.
Yeah, yeah, but there's no teacher like the School of Hard Knocks. Um, because then we were that was going to be back half of 2020, early 2021, and that's when we were in the middle of a bubble. And this is when I started thinking that, and I think everybody thought this, that we were all geniuses. That's when you had Dave Portnoy with DDTG, and you bought stocks that were just focused on nothing more than growth, and that's when you saw Fubo. That's when you had like the skills, and then you had, if you remember, CCIV thing, that was weird. That's
Listen,
when
I've been
Lucid.
through three sets of these. In my first bubble, 1999, I bought companies like CMGI and ICGE that went up 20, $30 a day.
Yeah.
A
Yeah.
day.
So then when's the second bubble?
The second one, so first one was when we had the 1999 bubble. And in the
Yeah.
middle, you had a brief bubble for about 2000, just after 2008, after the crash. Oh my God, we made so much money. Things
Oh,
were
in
crashing in the
2009.
market, securities market, but man, the market was pretty decent. We made good money
So you're saying like right before the market crash in 2008?
just after, just after.
Oh, just after. So probably when the Fed printed $1 trillion.
About 2010 to 2014, fabulous time.
Yeah. Yeah. I'm not sure if that's going to be that case this year, um, but I'm a newer guy. I'm a younger guy. I'm a millennial. I'm the next stage of investor. I
Right.
think the only difference between, and there was a lot of new investors that came on the scene at that time. I think that the only thing that made me still capable of being here is because I learned and I changed, and I think that that is, I get criticized for it on a day-to-day basis, for growing and changing my process and doing something. But it's at the end of the day, it's like, my wife and I have a nice sum of cash, and it's my responsibility to protect it. And I don't really care usually, because and I share everything that I do now, 100% transparent. It's like you guys can, I mean, I know that it may not align with your thesis or maybe your portfolio positioning, but that's what we have to do. It's not
Tell
easy.
me about tell me about your process. Are you more of a macro then going down guy? Are you macro technicals, fundamentals? How has your process evolved? What does that look like?
So this is a really, really good question, Makun, because this is one of the most important things of investing, is that at first it was fundamental analysis, and fundamental analysis has its place, and it's very important to learn how to read a company's financials, understand cash flows, and understand the importance of cash flows, and also understanding economies of scale and what a growth business, a good growth business should look like, and how they actually can scale to profitability or at least cash flow break even. So that was a that's like who I want to be. That's always who I want to be. I want to be a fundamental Peter Lynch, Warren Buffett style investor. But then I started to pick up on things like technical analysis and macro. And I learned that pretty quick, and I spent hundreds of dollars, and my wife got really mad at me when she saw the bills a couple times, but I spent hundreds of dollars on learning from the first guy that I started learning from was Richard Duncan. I'm not sure if you've heard too much
Right.
about
Review. I also listen to a lot of his podcasts.
him.
He's a super
He's
guy.
so smart. He's so smart, and he always has great thought. And he was the first one that taught me and opened my ideas to this concept of credit and economic growth. So credit growth equals economic growth, and that's when you start developing your own theories and philosophies, and then you just keep building on top of that over time, and you start understanding how important the Federal Reserve is and how important it is, like what they ended up doing in 2008. And I read a couple of his books, and one of his latest one talked about the Federal Reserve history from 1913 to now. So then I started learning about how the Federal Reserve really grew over the past 100 plus years, and the booms and the busts that they've been associated with, and more importantly, how the great financial crisis, and not the great financial crisis, the Great Depression ended up happening, what the Federal Reserve had to do to prevent that, or to get them out of it, I should say, or coupled with the federal government's spending.
Right.
So I mean, but here's the thing, I've also learned that all of it doesn't matter. And the reason why I say that it doesn't matter is that you need to understand it at its very nuts and bolts. But this is a concept that the macro bears are going to get very, very wrong for 2022. Is that you can understand this stuff and you can be as smart as you want to be. But and I actually made a Substack publication on this, and this is going to be wildly unpopular for now, until 2024 happens. But it doesn't matter, because what ends up happening in the market is the only thing that matters. Like, I ended up selling out of all of my stocks 2.5 weeks ago because I knew what a banking crisis was. I saw it. I saw SVB, and I knew what happened. I was like, the Federal Reserve popped the debt bubble, or the bond bubble. And I just posted about that this last weekend, and I said that's what they ended up doing, is that they ended up creating billions or trillions of dollars of unrealized losses on these banks' balance sheets. And then more importantly, they were decreasing the money supply. So then, I mean, I know that they were saying that the SVB's bank deposits were going away, but I mean, that doesn't necessarily matter. When you're decreasing the money supply, you're decreasing the money supply. That means that people aren't getting that constant inflow of cash. So what
Credit
did
is
they
not
end up
building up
doing?
again.
Exactly. And their policy response absolutely blew my mind. And I was like, if I would have known that they were going to do this, I would not have sold my stocks, and I would have just taken advantage of the volatility, probably bought more. But that's what I mean by it doesn't matter, because the markets are so centrally controlled these days that obviously it's going to be important to understand what inflation happens, or what happens with inflation, or Federal Reserve policy, or government, or even like what the Treasury is doing too in the government deficit that they're running. All that stuff is important to know and to understand what's going on. But making portfolio trading decisions or even management decisions on that doesn't, you should never do that.
So, Pat, to summarize, you started as a fundamentals guy. That's where your basic starting point was. Then you moved and learned a lot of the technical stuff, and now you've gotten into understand the macro positioning as well, and how all three of them drive each other to a large extent.
All of them do.
So that's the thesis and the strategy. Talk to me about tactics and mechanics. What do you use to manage what is your trading platform? What is your charting platform? How often do you track your screener and your screening of your stocks? What does your week to week look like in terms of, okay, here's how I'm doing this business, as opposed to thinking about the business as well, which you probably spend a good amount of time.
I think I spend 80% of my time thinking and about 20% of my time doing. So I think that it's very, very important to understand intermarketing analysis. And what I mean by that is that paying attention to what the other markets are doing. So what is the US dollar doing? What is the bond market doing? And those are two things that are really going to be one of the most fundamental drivers of stock prices, because that's really at the end of the day that the rising and lowering tide that lifts and sinks all boats. That's when you always find out who's swimming naked, is because if the U.S. dollar is going down, then that increases the potential for corporate earnings that eases the monetary system, right? That increases the accessibility of credit, and then you can
Right.
also follow the financial sector, and also the bond prices too. So there was an inverse correlation in 2022 that was historic, where the bond prices actually decreased along with stock prices. That was
Unusual.
that's never happened before. Yeah, so I pay more attention to that. I pay more attention to all, like, how all the interworkings and how that all pays, like how that all works and correlates. Kind of like Stanley Druckenmiller in 1986 or 87. His first big trade was when he started to notice that the stock market was becoming overvalued, it was running a little too hot, the US dollar was going up, and inflation was increasing. When you pay attention to these things, these are historically going to be a bad, right? Bad for stocks, because then eventually stocks, they peak out and then they crash. And that's exactly what happened. So if you pay attention to a lot of how these other markets play into stock prices, this is rule number one, right?
Yeah, yeah.
And then rule number two is following what the Federal Reserve is doing, and it's less about what the Federal Reserve is saying right now today. So who cares if the Fed hikes 25 basis points to 0 basis points tomorrow? This is the only reason why this matters, is because people want clicks. They want YouTube videos to make on it. They want to write their Substack articles on what their prediction is. And they want to be right. And the more right that they can be, the more people are going to pay them for their subscription. It doesn't matter.
It's a vicious
The only
cycle.
reason it is, it's a vicious cycle. And the only reason why people care about it is because they're making money on it. And they're not making money because they're not making portfolio choices. They're not making money on their portfolio choices because you can't trade around that stuff. But it is important to understand the market cycle that you're currently in. And more importantly, how are they combating inflation? And then also, how is that going to progress, from a recessionary standpoint, or if the outlook for corporate earnings. I'll stop right there.
Let me ask you a question. When you look at this and you see how your life has changed in the last 4 years, 2019, 2020 to 2023, you've obviously grown in terms of learning about the market, learning about how things work. What
Yeah.
would, what would you tell yourself now in terms of positioning yourself to pick up the opportunities that matter and to be able to make money and keep learning at the same time? What are the things that you would tell yourself?
Um, Number one, never, ever, ever listen to a financial guru. Like, I think that I have lost more money listening to people from, like, they have big platforms too, big YouTube followings, big Twitter followings. Like Peru, for example. This dude has 320,000 followers on Twitter, and I can't tell you how many times this guy has been wrong. I like hearing his thoughts and ideas. I think he was actually a real money manager, but he has lost a lot of money too. That's why he stopped posting his portfolio results. And then also a lot of YouTubers out there where they constantly said, buy the dip, buy the dip, buy the dip, buy the dip, after the bubble was already imploding. And they lost millions, millions. Nobody is more accountable for your portfolio than you.
And yourself. Yeah.
So, yep. And so I think that's one thing that I tell myself, is never, never listen to anybody. And sometimes I think that people shouldn't even listen to me, because I don't care about their portfolio as much as they do. I care about my portfolio. I'm always going to share my thoughts if you want to hear what I'm thinking. But that's the best thing that you can do for your money. But technical analysis is key. The reason why technical analysis is key is because it's the easiest thing to learn. So if you really
Hey,
need to
pause right
know,
there for a
go ahead.
second. Let me repeat that and then I'm going to let you speak again. You
Hmm.
said technical analysis is easy. That's not what I hear from a lot of people that are trying to learn it. Why do you think it is easy, and how does one go about acquiring that knowledge?
That's a really good idea. Because there's not really any books on it. I think How to Make Money in Stocks is a good one,
Hmm.
that I read, and that's by William O'Neill, and there's a whole segment on Twitter that is dedicated to it. I think doing technical analysis on the markets is more important than doing technical analysis on individual stocks.
Hmm.
because the more liquid the market, the more technical analysis is respected. So if you start with the S&P 500, then you can actually get a good understanding of what the whole market's going to do, because the whole market follows the S&P 500. But when you get a market environment like 2022, where actually late 2021, early 2022, where the market became bifurcated, that's when it's meaning that the large cap tech stocks and large cap stocks in general held up significantly better than small cap stocks. Then you also need to understand how the other markets are working together too. That's so I follow the sectors. So I follow the technology sector, the
So
high
the
growth sector, the
SLT.
innovation sector. Yep.
Got it. Got it. Tell me about the process of you trying to pick specific opportunities in the market that you. How do you go about thinking and saying, okay, how do you take from, okay, there's so many stocks in the market, I'm going to go down even further to these 50 and then even further to these 10 and this one. How does that work for you?
So I won't look at a stock unless I think that it's going to be a part of a market that's going to grow. So I think I think that there's some really great stocks that have emerged. I think about Crocs. That's one of them. Crocs has been an amazing stock, but it's just a footwear company. That's a total shot in the dark. And then there's also going to be some furniture companies, and I think that there's a chiropractic company that I can't remember exactly. It's Joint, JNT. So there's a couple other companies out there that became great companies because they fundamentally did the exact same thing. They grew their revenue, earnings, and cash flow. Full stop. That's what makes a good company, right? But you're going to
And
increase
year
your
in,
odds.
year out, quarter in, quarter out. That's all they do.
Exactly.
Quarter in, quarter out, year in, year out. They take care of
Nothing
the
else
business.
matters. Exactly. They take care of their top and bottom line. Period. That's that's that simple. That's what people need to understand. They manage their cash position well. They don't have too much debt. They grow their revenue and they grow their earnings. So you can't just grow your revenue, or you can't just grow your earnings and then have your revenue decline, because it
A
doesn't
red
work like
flag,
that.
a yellow flag, red flag, whatever.
Yeah. Um,
Tell me about uh, once or whatever number, two, three, five stocks that you're really watching right now that you're excited about.
I think every stock that I own right now, I'm pretty excited about. I think that Snowflake right now is my biggest position. And the reason why is, sorry, man, these dang bubblers, they get
Is
me.
that Celsius?
No, it's a bubbler.
Bubbler. Oh, interesting.
My
Sparkling
wife is
water. Okay,
sponsored by
it's
them.
good. It's not one of those
Um,
monster energy drink things.
no, no, I drink one of those in the morning. No, I got caffeine
You
problems.
know, that's the interesting thing. My son was telling me he doesn't drink coffee. He drinks that stuff. That's his
Hmm.
caffeine jolt in the morning.
That's me too.
You young
Yeah,
kids.
that's me too. That's why my teeth stay white, Macoon.
I don't drink coffee. I've never had coffee in my life, Dylan.
Never?
Never, ever.
No caffeine or anything?
No coffee at all, no tea. And maybe once in maybe a month, I might have a Sprite.
What
But
about any alcohol? Do you drink any
I
alcohol?
don't alcohol. I don't drink alcohol.
Oh my gosh, man.
No alcohol, no meat,
I
nothing.
did that for I did that for 6 weeks
Was that
this year.
during the what do they call it? The
The New
dry
Year's resolution or something.
January?
Tried
Yeah.
made it 6 weeks,
Yeah, you
but I
millennial
couldn't cut
guys,
out
man,
caffeine.
you make up stuff all the time. But anyway, back to this. Tell me about besides Snowflake, what else are you excited about?
I think a lot of those data that I can talk about the sectors. That might be helpful for people.
Yeah.
I think the data infrastructure is huge. I mean, that's what everything, Kev, the way business is becoming is that you must have data infrastructure. Semiconductor companies are obviously on fire right now, Nvidia, AMD, etc. Those companies are doing very, very well, and I that's definitely for a reason. I mean, first off, the semiconductors are very well run companies because they're growing revenue, earnings, cash flow, right, and GAAP profitability, which is important. Um, but anything data infrastructure related is going to be very, very important in the future moving forward, and that has a lot to do with artificial intelligence.
So if you
But
look
I,
at
I think
the data related companies, the four names, tickers, I'm sure I'm missing a few. Snowflake is one.
mhm,
Terradata TDC is another ticker. AYX Alteryx is a third one. That is a ticker that is in the data space, if you will. There were a few others, but besides AI, ticker symbol AI, which is C3.ai, in the data infrastructure, Databricks is still private. They're expected to go public. Don't know when. Fivetran is expected to go public. Don't know when. What other tickers do you find? Or of course, the usual suspects: Google, Amazon, Microsoft. They all do some data, but they're not data infrastructure companies only per se, right? They're very diversified conglomerates in technology. Who else do you see in the data space?
Confluent. I think that a lot of people overlook them. Data in motion and the concept of data streaming. It's one of those concepts and one of those topics that we see it every single day, and well, let alone the Apache Kafka opportunity is enough for Confluent, and it has been enough for a long time. But the concept of data streaming over the next 5 to 10, 15 years, I can't help but believe that people are going to want things faster. They want to know the information now. I mean, we already have push notifications and everything that we have. But when you think about tomorrow's digital business, what does the perfect digital business look like? And when you really grasp that digital business, when it becomes perfect, is going to work so efficiently and so fast because the data is going to consistently, and it's always going to be there, almost like a living organism. It's already a living organism as it is today, but it can still continuously be improved from a data management standpoint. Because I know that I've been in corporate America and I've been on the leading edge of it. Gartner, and they're supposed to be the thought leaders, but you still have collaboration inefficiencies. You still have analytics that leaders are still trying to gain access to, especially like what's the productivity of their sales force, what's the productivity of the HR team, where can they cut costs over here, where can they expand investment over here, what's actually going to be the ROI that you're going to end up receiving on hiring into this. That's all the decisions that they're making. And then data streaming, more importantly, and getting real-time feedback on everything that we need. That's where I see with Confluent, because they're an enterprise tool for that. And then obviously Datadog. I think that one's really been kicked off to the side because the application observability platform is important, because there is going to continuously be more applications that are going to be necessary for the enterprise. And that's really where Datadog comes into play. And then I'm a big fan of Sentinel-1. And Sentinel-1,
on the security side.
Exactly. I like Sentinel-1 more than I like CrowdStrike. And because
They're
for one, it
smaller as
has
well, right? They probably have a lot more room to grow. CrowdStrike is a
better
great
valuation.
company, no doubt about that.
Yeah. CrowdStrike's a great company, but I think that from like they approach XDR in a different way. So CrowdStrike was originally EDR, meaning that they were just primarily endpoint, and then they had that back end. They had that back end. Oh my gosh, my little Pomsky right now, he's about 9 months old. He's just driving me crazy. Get out of here. Get out of here, buddy.
I have a double doodle. He usually comes
Yes.
in. For some reason, he usually bangs the door and he says, "What are you doing? I want to come and hang out with you." But luckily today my son is at home, so he's just hanging out with my son, I think.
There you go.
2.5.
My little
Zuko.
Pomsky.
2.5.
Oh my gosh. Go lay down. Go lay down. Okay, there we go. We're good. Sorry about that.
No, don't worry. That's what makes our YouTube video fun. We got everything going on in our life. This is reality.
Exactly.
We're not at work sitting and doing all this stuff every time anymore with quiet conference rooms.
Not anymore.
That stuff
this
is
is real
overdone.
life.
Let me ask you two quick. I'm going to give you 5, and I want your quick bites on all 5 of them. Okay, very short, 2 to 3 sentences each. Amazon laying off 9,000 people. What's your take?
I think that they overhired. I think that all the mega tech companies overhired. Meta, Amazon, Google. I think that there's just in general the big tech culture got so. I mean, there started becoming a trend there on TikTok. Like, day in the life of Meta, and it's just lay them all off because they're not productive. They're not productive. I think that they're trimming the loose fat around the edges.
Okay.
I think that's what they're
Take
doing.
number 2. Yesterday, Stanford said that they recreated OpenAI's ChatGPT for $800 compared to the millions of dollars spent by OpenAI. Your quick take on that?
Doesn't surprise me. AI is on the verge of a boom. Like we are just about to see this mass acceleration in artificial intelligence and the applicability of it. I cannot pronounce. I cannot speak English.
Oh, you're good.
Uh,
You're good. Okay,
um,
quick take number
yeah,
three. Credit Suisse gets bought by obviously UBS, but the take I want to know is the primary or the first defense bondholders were zeroed out. Cocoa
contagion
bonds.
is the
They're called
first word
cocoa
that I'll
bonds,
think.
right?
Yeah, I think contagion. I think that anything that comes with the banking sector and killing investors, people don't think about. People always think, and it becomes political in a sense, but other banks owe banks debt. So when you zero that out, that blows holes in other people's balance sheets, and that's a big problem.
What's your last quick take on next quarter revenues are going to show up in about a month from now or less? Tesla. Everybody wants to know about Tesla. What's your take on Tesla's next quarter? 425 is the expected number of shipments for the quarter.
Yeah, they got a nice backlog. I think that the car market right now is actually going through a structural problem, and I got nervous about Tesla at the beginning half of this year, but the car market is going through a structural problem and a seismic shift, and it's very clear in the legacy auto manufacturers where the internal combustion engine vehicles are seeing a decline in demand, but EVs are still seeing that increased demand, so the entire market is going down, but the ICE vehicles are going down faster, and then
Then
there's
their
still an
EVs are going
increased
up.
demand of the EVs. So I think that Tesla, for now, for this business cycle, should be okay. In the future, probably not so much.
Good. Awesome. Dylan, this was terrific.